progressive approach is a key to running a successful business. Seeking out new ideas and solid advice backs this success. Welcome to IQHQ, proudly presented by Cliftons, the insights you need to succeed.
Hi, it's Kurt and Daniel from Clifton Accountants, and today we're going to talk to you about land tax. Daniel.
Okay. Land tax is a state-based tax, and it's based on the value of land that you hold in your name or on a different structure, Kurt.
Yeah, so being a state-based tax, it means that if you hold land in New South Wales and you pay land tax on that land based on New South Wales rates. If you hold land in a different state, obviously that's where you pay your land tax, and it's based on the rules of those different states.
Correct.
Now, in New South Wales, Daniel, the threshold is $482,000.
It is.
Which means that if you have land value of up to $482,000, then you're sweet. Anything under that, there's no payroll tax at all. But once you get over that, you start to pay.
That's right, and instead of tax of 1.6% over that threshold. The key thing to note is that different states have different rules. Some states don't even have land tax, so you just need to be mindful of that. And depending on the structure, there's different rules associated with the thresholds too.
So tell us, Daniel, because I have people come and ask me whether they should hold their land in a trust or in a company or individual. What's the different rules as far as thresholds for different entities?
Yes, so you get the threshold when you hold land in your own personal name, in a company, a super fund, and even a fixed trust. We've come across circumstances where we've seen land held in a discretionary or a family trust. No threshold applies to land held in that type of entity. So basically you're paying land tax from the first dollar. So we've had a number of cases where we've had new clients that have had held land, and when the first thing we've done is tried to get them out of that structure and transfer into better structures so they can avoid land tax.
It's also important to know that land tax is not payable. Some people might hear this and get a bit concerned about their family home. Land tax is not payable on your family home, and it's also not payable on farmland. So it's all other land that's grouped together to work out whether you're over the land tax threshold. And one other thing on that, it only includes the unimproved value of the land, not any building. So if you have a rental property worth $600,000, the land might only be worth $300,000 of that, so you're still under the threshold.
Yeah, and the value actually is assessed by the valuer general. It's not something you individually assess yourself, work out the market value of that land.
So I often have clients, Daniel, come and say to me, they've got a trading company, so they're running a business through their company.
Yeah.
They've already got investments in their personal name, so they want to invest or buy a property in their trading company. Is that a good idea? Tell us why, or why not?
Sure, you get the threshold for land tax purposes, which is fantastic. But there's other considerations that need to take into consideration. The first one relates to capital gains tax. With a company, you don't get the 50% discount, so therefore you need to be aware of that. So when you sell a property, you're not going to get that discount. The other thing is when you've got a trading company, there are some asset protection issues there as well, in that you're putting your property at risk with the trading or your business.
Yeah, one of the main reasons we set up companies for clients is for asset protection. So if you're putting an asset like an investment property in that company, then you kind of getting rid of one of the values, one of the main selling points of a company. The other thing that some people, I guess, would be concerned about and may want to know is, if I'm buying a property, am I liable for any unpaid land tax from the previous owner if they had to be registered for land tax?
There is a risk there. What I'd probably suggest to you is you get some legal advice on that, because there could be some considerations when it comes to buying property. Generally, land tax actually in New South Wales in particular, land tax is actually assessed at the end of December, 31st of December. So if you hold the property at 31st of December, you're liable for land tax for the full year. So that's something to be considered when purchasing property.
And if you get a land tax clearance certificate, which most solicitors will do for you on a property transfer, that'll ensure that you're not liable for the land tax on that the previous owner had. So, look, thanks for being with us today. If you want more information, feel free to see us, call the office, or see our website at cliftonaccountants.com.au.
Thank you.
Thanks.